Imagine waking up and knowing your investments are paying your bills every month. That's the power of dividend investing. And yes, regular people really can live off dividends. Today, I'm going to break down the simple math behind living off dividends, how much money you actually need, and beginner mistakes to avoid. This is educational only, not financial advice, but it will make you a smarter investor. Let's get started. 1. What does living off dividends mean? Living off dividends means your investments, usually dividend-paying stocks or ETFs, generate enough cash payments to cover your living expenses. You're not selling shares. You're not relying on a job. Your money is working for you. Dividends typically pay every quarter or every month, depending on the investment. If your annual expenses are, say, $40,000, then your goal is simple. Build a portfolio that pays $40,000 per year in dividends. Let's break down the math. 2. The simple dividend math. The key formula is dividend income equals portfolio value cast dividend yield. The dividend yield is the percentage a company or ETF pays every year. For example, a 3% yield pays $3,000 per $100,000 invested. A 4% yield pays $4,000 per $100,000. A 5% yield pays $5,000 per $100,000. So the higher the yield, the more income you get. But high yield often comes with higher risk. We'll get to that later. First, let's talk about realistic numbers. 3. How much you need to live off dividends. Let's assume you want $40,000 per year in passive dividend income. Using different yields, here's the math. Scenario 1, 3% dividend yield, typical for broad market funds. You would need $40,000 for your 0.03 when it 33 and 33. So about 1.3 million. Scenario 2, 4% dividend yield, many dividend ETFs. You would need $40,000 for 0.04, $1,000. A clean 1 million in. Scenario 3, 5% dividend yield, higher yield ETFs. You would need $40,000 equal 800,000. So 800 Kalon gives you $40 per year if the yield is stable. Scenario 4, 6-cent plus yields. This might reduce the total needed to 600 to 700 K's, but these yields are often unstable. So most people aiming for dividend income focus on portfolios yielding 3 to 5%, a balance of stability and reasonable payouts. Now let's talk about how to actually build that portfolio. 4. What you should invest in, beginner-friendly options. For beginners, the easiest path is using dividend ETFs. These funds hold dozens or hundreds of companies and automatically pay you dividends. Popular categories include 1. Broad market dividend ETFs. Lower yield, 2.5 to 3%, very stable, designed for long-term growth. These are great for beginners who want safety. 2. Dividend growth ETFs. Yield, 2.4%, holds companies that raise dividends every year. Your income grows over time. This helps your purchasing power keep up with inflation. 3. Yield REITs. Higher yield, 5 to 7% or more. Good income but higher risk. Prices can be volatile. Avoid concentrating too much on these as a beginner. For individual dividend stocks. Examples: utilities, banks, consumer staples. Can give consistent income. Require more research. You don't need to pick individual stocks to live off dividends. A simple mix of dividend ETFs is enough for most people. 5. The biggest mistake beginners make. The number one mistake beginners make is chasing extremely high dividend yields. If something pays 10%, 12%, or 15%, that usually means the stock is risky. The dividend may be cut. The company may be struggling. The price might crash. A high yield is often a trap, not a gift. It's better to earn consistent, reliable dividends than chase super high payouts that can disappear overnight. 6. How to know if your goal is achievable. Here's the simple way to know if living off dividends is realistic for you. Step 1. Know your annual expenses. Example: $40,000 per year. Step 2. Choose a realistic yield. Example. Step 3. Do this math. Expenses for target portfolio size. $40,000, 0.04, it's $1,000. Boom. That's your number. If your number feels too big, don't worry. Most people build dividend portfolios over years, even decades. Dividends are a marathon, not a sprint. 7. Tips for building a dividend portfolio faster. Here are quick tips to build your income faster. Tip 1. Reinvest your dividends. Use DRIP, dividend reinvestment plans. Your income grows automatically. Tip 2. Add money consistently. Even $100 to $200 a month compounds over time. Choose low-cost ETFs. Lower fees equals more money staying in your pocket. Tip 4. Focus on dividend growth. Companies that raise dividends yearly help your income keep up with inflation. Tip 5. Don't panic, sell during market drops. Dividends often stay steady even when stock prices fall. 8. Final takeaway. Living off dividends isn't some impossible dream. It's simple math, consistent investing, and long-term patience. If this helped, hit like and subscribe. Thanks for watching.